Good afternoon, everyone from sunny Nairobi. We have good weather today. It's been a pretty cold season. My name is Wambui Mbarire. I run the Retail Trade Association of Kenya. And today I want to broach the topic of the future of retail in relation to modern retail, the small retail, and the e-retailer. Now, in our situation, modern retail is brick and mortar 80% and 20% e-commerce. E-commerce got a really good boost in the year 2020 during COVID when people were holed in, and suddenly we woke up to the fact that we could actually shop for our everyday FMCG produce online. We have people who moved from 0 to 3,000 transactions in a day, giving life to a lot of online presence that existed but was not actively being used. So what do I see going forward, especially for modern retail? I see the use of data. Our modern retail in Kenya has a lot of data they collect through many loyalty existing systems, but that data is not used conclusively to either gain loyal customers or transform it into data that can be used to prosper the business. I see a lot of that happening as we go forward. I see a lot of adoption of technology and the use of robotics. Retail is intensive in matters labor, and as in many parts of Africa, they do not have, and even here in Kenya, we do not have a proper retail curriculum, meaning we have a lot of unskilled labor working within retail. And because of the labor intensity, it means a large percentage of whatever profits we are making go into labor. So I see us adopting the use of robotics as we go forward. I see a lot of professionalizing. I think we'll adapt systems coming out of India and out of South Africa to create our own retail curriculum so that you actually come out with papers that qualify you to work within the sector. Currently, we have a lot of people who do not view it as a job because it doesn't have a career progression path, coming because of the lack of a curriculum. You do not go to school to learn retail in this country, so we end up having a lot of people running retail coming out of other sectors, be it accounting, banking, marketing. Generally, the finance sector are the ones who end up being the managers. So we see growth into a curriculum of retail. We see a lot of decisions being a new way of making decisions in regard to identifying the location. Traditionally, once a project came up in terms of property, somebody would simply take it up. You are approached as an anchor tenant, and being an anchor tenant gives you the advantage of reduced rent or a rent-free period. Net effect, you would agree to go into a location even without having done the proper feasibility study for that particular location. So I see a lot of consideration being given to next location being taken up. I see a lot of thought around the size of a supermarket. For example, we had grown into an area where we were doing a lot of hypermarkets that would go into a first floor, second floor, third floor. I see rethinking around having just one ground floor. I see a lot of rethinking in regard to the size, again, based on the location. So there'll be considerations of, is it a neighborhood store and how big should it then be? There'll be a lot of consideration in terms of what will be stocked, decisions around what are you stocking in what area, so that you do not have stuff that is taking space that would have been taken by something that is actually moving. Again, going back to the use of data to analyze what you're selling in a location and what is actually really moving. I see us growing into partnership. Again, traditionally we have had, especially in Kenya, a situation where the supplier delivers, walks away, and comes back 30 days or 45 days later to collect payment, having taken no participation in regard to moving the product. So I see a lot of partnerships arising between suppliers and the retailer to move produce. Again, partnership towards innovating new products and creating shelf for the particular industry. I see a lot of adoption, and this has already started, especially because supermarkets are moving more towards food, focusing on in-house delis that give ready-to-eat food, focusing on fresh fruit and vegetable. So I see more intentional consideration and putting in place safety and quality standards to ensure that the amount of attention we give to produce, especially from our country, going to the international market, particularly Europe, that we start giving and have started giving more attention to domestic produce that is being stocked into the supermarkets and the green grocers. I see as we move forward, a creation of more neighborhood stores. People are tending to be more willing to shop within their area, and this will arise out of the competition that then will exist more competitively between the small retailer and the large retailers. So if we look into the small retailers, I see a bit more structure. Small retail is very informal, without proper systems. A lot of them are known to the government in terms of registration, in terms of tax payment. I see them going into formalizing their operations. They will continue to be the first stop of new innovations in technology and in product production. They will become the center of the training for the retailers. It will become where the entry by professionals will start being seen, because they will then be the ones setting up the businesses to ensure that we have more former small retailers, especially neighborhood outlets. There will be a continuous growth in terms of efficiencies and partnerships. For example, there'll be joint purchases of small retailers, so they'll come together to buy. And this is the our dukas or mom and pop shops that will be looking to buy jointly for to enjoy economies of scale, and to also expand the variety of products they have in their particular areas. They will look into having joint logistics in terms of things like distribution, the purchase of transport facilities, so that again they are enjoying the economies of scales and looking to compete on matters price with what the formal sector, the formal retail supermarkets are offering. If we look at e-commerce, for example, in Kenya, as I said earlier, 2020 became the year of e-commerce, especially in FMCG produce. That means a lot of people are going to adopt online presence. As I said, brick and mortar is still 80% of our retail, be it in supermarket, in furniture, in retail, specialty retail, that is. Brick and mortar remains king, but we are going to see for FMCG, even on the small, we'll have joint platforms. We'll have more people adopting the use of Jumia, the use of Glovo, and other online platforms that exist. And people waking up to the realization that they don't all have to create personal online platforms, but can partner with people who already have the infrastructure for e-commerce. I see maybe solutions that would be more localized. For example, we have Copia Kenya. Copia Kenya is adopting e-commerce in a localized sense. As we all know, in many parts of Africa, and Kenya is no exception, we have challenges in regard to an address system. So the last mile deliveries is always a challenge and becomes a very expensive affair. So Copia Kenya, for example, appoints agents in various locations in the outskirts of the urban areas, where they have an agent. You go to the agent, you order online, your produce is delivered to that particular agent, and then you collect from there. That cures the challenge of the last mile deliveries, but manages to bring the produce to the people as close as possible, bearing in mind the challenge of address system. As uh, One of the other things that is going to have to be considered, especially in the e-commerce element, is how do we sustain the patronage of the customer? We know that today's customer, especially that customer that is able to shop online, is very his preferences are changing. His has preferences are changing every day. How do we keep them engaged? How do you meet their daily demands, which are changing? How do we ensure that we are current on all the forums that exist, that people are then shopping on it, be it Facebook, be it Instagram, be it WhatsApp, because there's a lot of WhatsApp, and how do we ensure that going forward, the interconnectivity of everyone is given attention to ensure. For example, we have the good fortune in Kenya of being probably one of Africa's largest, having the largest population in terms of access to internet. I think the last time we did a survey on that, it said 80% of Kenyans actually have access to internet. Now, that coupled with the fact that we're the home of M-Pesa also has created affordability, accessibility to online purchases, regardless of which part of the country you are. And this means that as we go forward, online will continue being relevant, but may not compete with brick and mortar. It will complement the brick and mortar discussion. I think it is also important to talk about the evolving payment platforms. We've seen M-Pesa grow significantly. Even as cash remains king, M-Pesa competes pretty well because that converts into my bank account within under 24 hours. We see Visa and MasterCard trying to create systems that then reduce my time at the till. If it's efficient in terms of talking to the bank when I'm at the till happens instantly to reduce the income, because if we can work around that, then more people will start adopting the plastic money. The the costs. I see a question on the chat of how is the date cost impacting daily transaction. Okay, I'm not sure what the question is asking. But if we speak to online payments, a lot of them come with an extra cost. You must pay for the convenience, and unfortunately, M-Pesa is not a cheap form of payment. The costs are usually pretty high. Online payments in terms of using card is more efficient and cheaper. However, its adoption rate remains pretty low, and this has a lot to do with consumers actually understanding it. I don't know whether it is similar to other parts of Africa, but in Kenya, unfortunately, the plastic money was introduced as an ATM card, so people still relate to it as an ATM card, and I think there's a lot of education that requires to be done to convert people's thinking away from ATM cards to becoming a debit card that you can more continuously use as a payment format. Also, the reach, how far out of the urban areas are you able to continue having access to a PDQ? And that is where M-Pesa constantly beats the banks, because the PDQ would then perhaps encourage more usage outside of town. One of the examples that is given constantly is that, especially over holiday times, it is very easy to know that people from the urban areas have migrated to the rural area for the holiday, because then you see an upsurge use of plastic money within the rural areas. The other thing that it is important to offer is going back to the use of data across the three mediums of retail. That is modern retail, the small retail, and the e-retail, is using the data that you're collecting from our customers to ensure that we start giving personalized offers, so that if I'm if I'm a new mother, if you track my purchases, you do realize that I'm constantly buying maybe formula milk and Pampers and baby related items. So the use of data will remain very key across the board to ensure that everyone who then is collecting data uses it to improve their lot, to improve the customer experience, and to ensure that you're giving value to your customers to ensure that they return back to your particular sector. The other, I would want to also just mention a bit that even as we grow retail in Kenya, and I think it's common knowledge that we have the second most developed retail sector, being second only to South Africa. It is, as I said earlier, labor intensive. So it is a large employer, and it is also has the capacity to create a lot of jobs, a lot of business ownership. So we must put in place systems that educate our people in regard to things like succession, because what we've seen in Kenya, a lot of the challenges we've had in the retail sector has to do with not having systems that put in place the proper system in terms of stocks, in terms of management, in terms of finances and plans in place, meaning when the initiating generation is coming to its retirement age, do we have system to ensure that we run it, that the next generation picks it up and continues to be a challenge. How do we ensure that our systems facilitate proper cash flow management so that we don't have challenges in terms of paying our suppliers on time? That way we ensure that we continuously have a flow of stocks on our shelves. At the same time, putting it proper inventory system, shrinkage remains a very big challenge. How do we overcome that? We overcome that by ensuring that we have a proper inventory system that work end to end from receiving to till. If we continue to have disjointed, that is that receiving does not speak to the till, we will continue having leakages, and those leakages will continue to challenge our survival. In retail, generally, if you're below 2% of shrinkage, you're doing pretty well. I think it's common across retail, again, to see that a lot of people are operating with shrinkage levels of above 2%. And as we know, retail is a business of volumes and not of margin. So if we don't manage the shrinkages and the leakages, then we will definitely have a challenge. So maybe I'll add on to the e-commerce discussion. Brick and mortar will continue complementing itself with e-commerce, and e-commerce will continue complementing itself with brick and mortar. And I keep saying that there is not going to be anyone overrunning the other. If e-commerce was here to finish the existence of brick and mortar, Amazon would not have gone into brick and mortar. And Amazon being one of the largest e-commerce platforms, going into brick and mortar is an indicator that the two will continue complementing each other. It will be important to see how those who are going into e-commerce do not necessarily have. We've seen in the West systems where we have all these tap and go systems. How will those come to play into our African market? How do we continuously push growth of payment systems? How do we ensure that even as our retail becomes more formalized, we're looking to see whether we will grow on our own. We will ensure that we have indigenous African brands, that we do not get overrun by private equity firms that will then sell it out. How do we ensure that we run retail in an African manner so that we are speaking to our consumers with our products? How do we create constantly a platform for our indigenous project? In Kenya, we have what we call Buy Kenya, Build Kenya. How do we encourage our locals to consume more that is manufactured locally. And to this, I must say that the COVID year taught us that we must learn to be self-reliant. Once the borders close, we must be aware of what exists for ourselves, and it is an opportunity for us to explode our manufacturing sector so that we are consuming more that is produced locally, and in the process we'll be creating jobs for our people. We'll be developing and increasing our GDP in whichever part of Africa we are coming from, to ensure that we grow sustainably internally without depending on external markets, even as we look to export our own produce into the external markets. We might see in our situation a lot of mergers in what we call the tier 3 supermarkets coming together to form larger enterprises, again to be able to enjoy the economies of scale, and also to enjoy greater distribution benefits, because we notice that a lot of the smaller players sometimes have to do their own deliveries and collections from suppliers. So once they have the muscle, then they're able to demand a bit more attention from the suppliers and be able to again bring down their pricing for the benefit of the consumers. Thank you very much for having me.